Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So let's jump straight into a pop quiz. You have 3 Roth IRAs as follows. Roth IRA number 1 has been open for 10 years. It contains $50,000 in contributions. It contains $100,000 in conversions, and it contains $20,000 in earnings. Roth IRA number 2 has been open for 4 years. It contains $15,000 in contributions, $0 in conversions, and $3,000 in earnings. And then finally, Roth IRA number 3 was just opened so that you could do a Roth IRA conversion. The account currently contains $0 in contributions, $40,000 in conversions, and $0 in earnings. So here's the question of the day. You take a distribution of $18,000 from Roth IRA number 2. Assume for this example that you are under the age of 59 and a half and that there is no statutory exception related to the distribution. How much of the distribution is subject to tax and how much of it is subject to penalty? Okay, let's do multiple choice for this question. Option number 1, Roth IRA number 2 has been open for 4 years. Therefore, we do not satisfy 5-year clock number 1. Therefore, the $3,000 of earnings will be subject to tax. In addition to that, because we are under age 59 and a half and have no statutory exception, the $3,000 of earnings will be subject to the 10% penalty. Okay, option number 2. Roth IRA number 2 has been open for 4 years, but that doesn't matter because we already satisfy 5-year clock number 1 with Roth IRA number 1. Remember back up here, Roth IRA number 1 has been open for 10 years. Now back down here, so the $3,000 of earnings will not be subject to tax. However, because we are under the age of 59 and a half and have no statutory exception, the $3,000 of earnings will still be subject to the 10% penalty. Okay, finally, option number 3. Roth IRA number 2 has been open for 4 years, but that doesn't matter because we already satisfy 5-year clock number 1 with Roth IRA number 1, so the $3,000 will not be subject to tax. However, because 5-year clock number 2 has not been satisfied with respect to Roth IRA 2 specifically, the earnings will still be subject to the 10% penalty. Okay, make your selection. Is it going to be option 1, option 2, or option 3? And the answer is none of the above. All 3 of these options presented above are incorrect. Okay, now why is that? Why are all of the above choices incorrect? And the answer is because of the Roth IRA ordering and aggregation rules. Let's start right down here with the aggregation rules. So here is what you were looking at when making your choice above. You saw 3 different Roth IRAs. You were presented with the facts regarding how long each IRA was open for. You were presented with how much of each balance is broken out between the 3 buckets of money that are contained within a Roth IRA. In other words, the breakout was presented as contributions, conversions, and earnings. However, here is what the IRS is looking at when making the decision about what buckets of money are being distributed from your Roth IRAs. The IRS is going to take Roth IRA number 1 plus Roth IRA number 2 plus Roth IRA number 3, and it's going to aggregate them or look at all of the Roth IRAs together. So what's actually important to your decision-making process in this example are the following items. Number one, how long has the first IRA that was opened in your name and funded, how long has that specific IRA been open for? Remember, the only thing that matters for the first 5-year clock is that you have had at least one Roth IRA open in your name and funded for at least 5 years. So as long as you have that with at least one of your Roth IRAs, which we do in this fact pattern, this information right here is irrelevant. And this information right over here is also irrelevant. The next thing that is important for your decision-making process is what is the aggregate amount in these 3 buckets right here. It does not matter how much is located within each specific Roth IRA account. What the IRS is looking at is only the total across all Roth IRA accounts. So in this case, we would have $65,000 of contributions in aggregate. We would have $140,000 of conversions in aggregate, and we would have $23,000 of earnings in aggregate. So to summarize what we just said, the IRS looks at all of your Roth IRAs together or in the aggregate when determining if distributions are coming out of the contribution basis, the conversion basis, or out of earnings. And since the Roth IRA distribution ordering rules indicate the following deemed order for money coming out of a Roth IRA, that deemed order being first is all contributions or contribution basis is deemed to come out. The next thing to be distributed is all of the conversion basis. And then the last thing to be distributed is the earnings. Therefore, in this example, the entire $18,000 of distribution is deemed to come from contribution basis. Just to make that completely clear, the IRS is not looking at Roth IRA number 2 in isolation. It is not looking at this $15,000 and this $3,000 when deciding what the $18,000 of distributions consists of. It is looking over here at all Roth IRAs together, and since contributions are deemed to be distributed from the Roth IRA first, all $18,000 of the distribution came out of this contribution bucket right here. And therefore, going back down here, as we know from the video on the 2 5-year clocks for Roth IRAs, contributions to a Roth IRA can be withdrawn anytime, tax-free and penalty-free, regardless of age and regardless of how long the Roth account has been open. Now let's go back up here real quick to the multiple choice options and see where we went wrong with each one. Okay, with option number 1, Roth IRA number 2 has only been open for 4 years. Now, what do we know about this statement in this fact pattern? We know that this statement does not matter because what actually matters is how long the first Roth IRA that you've ever opened has been open for. Therefore, in a situation with 3 IRAs, the length of time that any specific one has been open doesn't really matter. Therefore, we do not satisfy 5-year clock number 1. That is an incorrect statement because the satisfaction of 5-year clock number 1 has to do with the Roth IRA that has been open the longest for yourself, which in this case was Roth IRA number 1. Therefore, the $3,000 of earnings will be subject to tax. That's an incorrect statement because we know we already satisfy 5-year clock number 1 due to Roth IRA number 1 being open 10 years. In addition, because we are under 59 and a half and have no statutory exception, the $3,000 of earnings will be subject to a 10% penalty. Now, pay close attention. If Roth IRA number 2 was the only Roth IRA that you owned, then this would be a true statement. In fact, this entire option 1 right here would be correct if Roth IRA number 2 was the only one in question. Going right here, pretend for a moment that we were only looking at this Roth IRA. It was the only one that you had. In that case, the $18,000 of distribution would be made up of what is right here in this chart, $15,000 of contributions and $3,000 of earnings. If Roth IRA number 2 is the only one in question, this statement right here would be true. It has only been open for 4 years. There are no other Roth IRAs that have been open for longer. Therefore, we would not satisfy 5-year clock number 1, and that $3,000 of earnings would be subject to tax. In addition, because we were under 59.5 and had no statutory exception, the $3,000 of earnings would also be subject to the 10% penalty. The reason why option number 1 is wrong in this fact pattern is because there are multiple Roth IRAs, and they are being aggregated for purposes of figuring out what buckets of money the distribution comes from. They are also being aggregated essentially for purposes of figuring out how long you have had a Roth IRA open and funded in your name. So that covers option number 1. Now, option number 2, Roth IRA number 2, has only been open for 4 years, but that doesn't matter because we already satisfy 5-year clock number 1 with Roth IRA number 1, so the $3,000 of earnings will not be subject to tax. Now let's be careful here. These two right here are true statements. It's also true that the $3,000 of earnings will not be subject to tax. But as we just said moments ago, it's really not this item right here, the satisfaction of 5-year clock number 1. It's really not that is causing the $3,000 of earnings not to be subject to tax. What's really causing it in this fact pattern is the aggregation rules and the fact that the $3,000 of earnings is not even being distributed. What's being distributed under the aggregation and ordering rules is $18,000 of contribution basis. So while these three are actually all true statements in isolation, the summation of these three statements is not actually the reason why the $3,000 of earnings is not subject to tax. Once again, it's not subject to tax because no earnings are actually being distributed. And then this statement right down here is the same as this statement right over there. This statement again is not applicable because earnings are not being distributed. Okay, finally, option 3 right over here. These first 3 statements are all the same as the first 3 over here in option 2, so we're not going to go over those again. The only statement that is different is down here. However, because 5-year clock number 2 has not been satisfied with respect to Roth IRA number 2 specifically, the earnings will still be subject to the 10% penalty. Okay, what is wrong with this statement right here? And I hope your answer is everything. Every single thing about this statement is wrong. Number 1, because 5-year clock number 2, let's just stop right there. Does 5-year clock number 2 even apply to this situation? And the answer is no. 5-year clock number 2 applies to conversion basis only. Going back down here to our aggregation of all the Roth IRAs, we have more than enough in the contribution bucket to cover the $18,000 that has been distributed. Therefore, we don't need to look at anything related to conversions, and therefore 5-year clock number 2 is completely inapplicable to this question. Okay, going back up here, 5-year clock number 2 is being referenced, and then the statement says, so the earnings will be subject to a 10% penalty. What does 5-year clock number 2 have to do with? Only Roth conversion basis. That is the only thing that 5-year clock number 2 is applicable toward. This statement down here is talking about the earnings bucket within the Roth IRA. Therefore, this statement right here has absolutely nothing to do with 5-year clock number 2 right there. So this entire statement right here is just completely erroneous. If you are new to the channel and are still struggling to understand the 2 5-year clocks related to Roth IRAs, make sure to check out this video right down here, Roth IRA, the 2 5-year clocks with huge examples. You can find a link to this video in the description below the video that you're currently watching, or simply search on YouTube for Number Crunch Nerds, Roth IRA 5-year clocks. Now, for members of the Personal Tax Planning Template program, I have just uploaded 6 all-new videos to the members area, including video number 1, you are over age 59 and a half and clock number 1 is satisfied. Video number 2, you are over age 59 and a half and the first Roth IRA that you have was opened by conversion. Video number 3, contribution earnings versus conversion earnings. What's the difference? Video number 4, the magic trick to turn 5-year clock number 1 into 4-year clock number 1. Video number 5, how to add repayment of the premium tax credit, which relates to Obamacare or the Affordable Care Act. How to add repayment of that to the personal tax planning template. And then finally, video number 6, we have some updates on the above the line charitable deduction that was put into law under OBA. So if you're already a member of the personal tax planning template program, you can simply log in at your convenience and check those out. And if you're not already a member, the personal tax planning template program is available for purchase at the link in the description below this video. And if you're new to the channel and would like to learn more about the personal tax planning template and see it in action, then check out some of my top videos on YouTube, including the $6,000 senior deduction put into law under the One Big Beautiful Bill Act. Is it an above the line deduction or is it a below the line deduction? Who is right? Then of course, for anybody who is retired or is ever planning to retire, my Roth IRA conversion video series starts here with video number 1, how to calculate Roth IRA conversions. Right down here, full explanation of how is long-term capital gain really taxed. And then right over here, an intensive 70-minute how to calculate your estimated taxes under the safe harbor. We go through a full example of how it's done inside this video. You can find links to these popular YouTube videos in the description below the video that you are currently watching. So that's going to be it for today's video. Thank you everybody for watching, and I'll see you next time.